From the railroad and steel consolidations brokered by John Pierpont Morgan on Wall Street more than a century ago, to banking consolidation, the financial crisis, and Jamie Dimon's leadership, JPMorgan Chase has been at the center of finance for more than a century. This is the story of how the country's largest bank got to where it is today. The year was 1907. America's financial system was on the edge of disaster. Panic gripped Wall Street, banks were failing, and the stock market plummeted. Desperation was everywhere. Yet, an unusual scene unfolded in John Pierpont Morgan's Grand Madison Avenue mansion. America's top bankers, usually rivals, had been summoned by the man known as the Jupiter of Wall Street. With nerves frayed and fortunes on the line, the fate of the American economy was now in Morgan's hands. Born into wealth and power on April 17, 1837 in Hartford, Connecticut, John Pierpont Morgan seemed destined for finance. His father, Junius Spencer Morgan, was a respected banker and a founding member of George Peabody & Co., a leading merchant bank. Young Pierpont had a privileged education, attending elite schools and traveling across Europe, where he mastered French and German, skills that later helped him in international business. His father taught him to be both responsible and financially savvy. Junius was a demanding mentor, and Pierpont's fierce drive was fueled by a desire to leave a mark on the world, perhaps even outshining his father. Even as a young man, Morgan exuded authority and confidence bordering on arrogance, taking risks that others avoided. Ambitious and obsessively controlling, J.P. Morgan became an influential figure in Gilded Age finance. But behind his tough exterior was a complex personality, with bouts of illness and occasional melancholy. He was also a generous patron of the arts, amassing a collection that later helped build the Metropolitan Museum of Art. Morgan was a figure of contrasts, a ruthless business giant with a softer human side. This mix of ambition and complexity fueled his rise and made him one of the most compelling figures in American business. Following his father's footsteps, J.P. Morgan began his banking career in New York. He rose quickly and in 1871 partnered with Philadelphia financier Anthony Drexel to form Drexel Morgan & Co. The firm quickly gained a strong reputation on Wall Street due to Morgan's sharp investment sense and strong business ethics. But Morgan's ambitions reached beyond this. After Drexel died in 1895, the bank rebranded as J.P. Morgan & Co., marking the start of Morgan's legacy. From the beginning, J.P. Morgan & Co. played a huge role in transforming the American economy. During the Industrial Revolution, the railroads, steel, and electricity boom created a massive need for capital. J.P. Morgan became the go-to financier, underwriting bonds and stocks for new corporations and investing heavily to drive their growth. Morgan saw railroads as the backbone of the economy, so he merged struggling railroad companies, creating vast networks that stabilized the industry, sped up trade, and boosted development. His influence was felt in forming mighty giants like U.S. Steel, companies that would define American industry. Beyond Wall Street, Morgan was a master of mergers and acquisitions. He saw potential in merging companies to create greater efficiency and control, expanding his empire and reshaping entire industries. Several major mergers laid the foundation for what would eventually become J.P. Morgan Chase. In 1959, J.P. Morgan & Co. merged with the Guarantee Trust Company of New York, creating the Morgan Guarantee Trust Co., combining Morgan's investment banking strengths with Guarantee's commercial banking expertise. This created a financial powerhouse. The bank's growth continued with the 1996 acquisition of Chase Manhattan Bank, founded in 1799 by Aaron Burr. The Chase name added historical prestige and expanded the bank's retail network. In 2000, this combined entity merged again with J.P. Morgan & Co., uniting two of America's most iconic banking legacies under one roof, birthing J.P. Morgan Chase & Co. J.P. Morgan & Co. was instrumental in financing U.S. war efforts during both World Wars, mobilizing massive resources to support the country. Yet the journey hasn't been without its share of challenges. The 1930s brought the Great Depression, a grueling test for many financial institutions, and the Morgan banks weren't spared. In 1933, the intense Pecora hearings in Congress scrutinized the bank heavily. This led to the Glass-Steagall Act, which required a split between commercial and investment banking. Yet, despite these formidable challenges, Morgan's influence continued to grow, rippling through decades. The bank was a key player in financing Europe's reconstruction post-World War II, and as the world grew more interconnected, it secured its spot at the center of global finance. JPMorgan's legacy as a bold risk-taker and master of mergers lives on. Today, JPMorgan Chase is a finance giant, with operations spanning over 100 countries and a workforce of more than 270,000 worldwide. JPMorgan Chase has a solid global presence, from bustling financial hubs in New York, London, and Hong Kong to emerging markets in Africa, Latin America, and Asia. This network gives the bank an advantage to serve clients worldwide and pursue opportunities across continents. The bank's structure is broad, with 4 major segments. The Consumer and Community Banking Division provides everyday banking services like checking accounts, mortgages, and loans. Its Corporate and Investment Bank serves large companies, governments, and institutions with advisory and underwriting services for complex financial transactions. The Commercial Banking segment focuses on lending, treasury services, and commercial real estate for businesses of all sizes. Lastly, the Asset and Wealth Management Division manages trillions in assets, offers investment strategies, retirement planning, and private banking. The numbers underscore JPMorgan Chase's strength. It has a market value close to $600 billion, an annual revenue near $250 billion, and manages almost $4 trillion in assets. This places it among the top global banks. However, as any significant company, JPMorgan Chase has had its share of controversy. Lawsuits have addressed various issues, from mortgage lending abuses to accusations of market manipulation. Despite these, the bank remains committed to technological advances to stay competitive, streamlining processes, enhancing customer experience, and using analytics for risk management. Its scale allows it to innovate in fintech, sometimes spinning off new tech-focused ventures. Yet, operating in a regulated industry can bring challenges. Recently, the bank faced criticism for funding environmentally contentious projects and overdraft fee policies, highlighting the balance it must maintain between profitability and social responsibility. With the rise of nimble fintech startups providing services like peer-to-peer payments and digital lending, traditional banks like JPMorgan Chase must adapt. This could mean acquiring promising startups or developing solutions in-house to stay relevant in a tech-driven market. Regulatory scrutiny has increased since the 2008 financial crisis, adding complexity and cost, but it is essential for a stable financial system. Today's consumers demand seamless digital experiences, shifting from physical branches to online banking. JPMorgan Chase continues to invest in tech and aims to create personalized digital services for these evolving needs. CEO Jamie Dimon has emphasized technology as the future of banking, supported by a hefty annual tech budget. While the bank is already global, it is expanding further, particularly into China. However, with global expansion comes new regulatory challenges. The digital age also brings cybersecurity risks. Any breach could harm the bank's reputation and finances, so vigilance is crucial. The bank must also brace itself against global economic shifts, as recessions can affect lending, loan defaults, and investment banking. However, JPMorgan Chase's strategy accounts for these risks. Although the future is unpredictable, JPMorgan Chase is well positioned to remain a major player with its vast scale, technology investments, and commitment to innovation. If it continues to navigate regulatory challenges and face fintech competition, it will likely keep its dominance in the banking world. JPMorgan Chase is set to hit many more milestones in the coming years, but its path will be shaped by shifts in the global economy and the rapid pace of tech advances. From the grand boardrooms of JPMorgan in the Gilded Age to today's tech-driven financial world, the bank has been a major force for change. Its story mirrors that of American business: bold moves, constant growth, a fair share of controversy, and remarkable success. JPMorgan Chase has stayed at the center of the financial world through wars, economic downturns, and tech revolutions. While the future is uncertain, its impact on global finance is already cemented.